Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to Today in Bitcoin. Today is July the 19th, 2017. This is home of cryptocurrency straight talk. No fancy set or graphics, just information. I am proud to have the best guest in the space on this show. And today we have a really special guest, a great international guest, because this is an international show. Simon Dixon, a Bank to the Future, who is based in Hong Kong usually, but is in London right now. Simon, welcome back to the show.
Hey, thanks for having me back, Adam. Yeah, I just arrived in London, a little jet lagged after coming back from Shanghai, but you know how that feels. You're always traveling around. I think you were in Hong Kong recently, weren't you? You caught the rain.
Yes. So we're going to talk about China and some international stuff very soon. I want to remind everyone that there was a recent show just a few hours ago. I linked to it below just in case you missed it. We're doing a lot of shows here suddenly, so check out the link. Always check out the links below. You can read all about Simon, go to his important links, and of course, pound that like button, everyone. So the last time Simon was on the show, we had a blast, and when we were off the air, we started talking about some other topics, and we're already coming up with topics for the next show. So everyone knows I'm not a big believer that the whole economic system is going to collapse. And I don't think Simon thinks the entire economic system is going to collapse, but there can be calamities and that sort of thing that occur. So what we were talking about, what central banks would do under such dire situations if there was some type of a bad financial collapse. You know, it was 20 years ago, there was an Asian financial collapse. So these things can happen. So Simon, tell us about what central banks would do and how Bitcoin would be used in all this, and the Bitcoin reaction. Just this is something you're very interested in.
Okay, all right. So I mean that's a big topic. There's a lot there. The first thing to understand is that you're talking about how you don't believe in economic collapse and the whole economy is collapsing. There's one thing history tells us is that an economic collapse is simply a redistribution of wealth from people in a certain asset class to another group of people in a different asset class. So, you know, if the whole economy was to collapse, you've got to ask what that actually means. Well, it might mean the banking system collapses, and if the banking system collapses, then that would just be a redistribution of wealth to people that are prepared for a banking system collapsing. If the central banking system goes insolvent, then you know that's a different thing, and then it's also per country. But what I think is the really interesting topic is that we've now got this tool called, you know, call it whatever you want, Bitcoin, blockchain, digital currencies, and banks, financial institutions, and central banks all around the world are all discussing it. They're all using it. They're all coding. They're all doing stuff. And they're all building tools to prepare for a different future. And so what I think is interesting is really what new tools are available, and what we can draw from that might actually help people prepare for what might come next. And so that's where, but I got to kind of pre-frame it a little bit, because in order to understand the type of analysis and the type of thing that we're discussing, this kind of ties into an understanding of money and how Bitcoin is different, how that relates to altcoins even. So we can discuss all those different topics here today. And then maybe I can draw that as we close into some forecasts of what might come next, and some reactions that I think central banks would have as the environment unfolds.
Yes, I think it's very good that you made that clarification, because there's a lot of people out there that expect like the world to end, basically, and this is not what you're talking about. You're talking about realistic scenarios here. Definitely.
Yeah, so I mean, you know, the world ending is kind of means the destruction. I would say the destruction of money would be, you know, a major problem in the world that would send humans loopy, and you might get some kind of zombie apocalypse that the conspiracy theorists are talking about. But the reality is that the destruction of one form of money will just lead to another form of money. And if, you know, America is crippled under its own debt because it's a very real risk, then it will simply rehypothecate with a new form of money and figure out the, you know, the best way to actually not destroy its currency, but replace it with another form of currency. And that will lead to a redistribution of, you know, the superpower. And history has shown us, you know, the Brits were the 19th century empire and superpower. The Americans were the 20th century, you know, superpower. And many people believe that the Chinese will be the 21st century superpower. And all of those changes tend to happen with some kind of shift in monetary policy, and currency tends to always be the catalyst for these changes. So I think the first thing to really understand, and you know, this is interesting to your users, and this is actually the reason why I got into Bitcoin in the first place, because I was a banking geek guy, you know, before Bitcoin was invented, and I wrote the book Bank to the Future, and the next version of the book, I believe, was the first book in the world that covered Bitcoin. I could be wrong there, but the main thing that I wanted to explain was just the difference between Bitcoin and banking, and this really ties into people's understanding. And it's very simple. There's three simple ways of why I actually got interested in Bitcoin in the first place, and that was as a hedge against bank deposits and systemic risk in banking. So the first thing to understand about your bank deposits, and I think Bitcoin gave the first highlight to people to really understand this. But the first thing, you know, to understand with your traditional money is that when you deposit it with a bank or you get paid your wages, the bank is the legal owner of that money. And when they're the legal owner of that money, they can do with it as they wish. So the second thing is that they actually spend that money. And the way that the banking system works is they spend that money on things that the bank considers low risk, high return. And so almost always, in most cases, they take the money that you think is yours, that's not yours, that they agree is, you know, to repay you every time you go to an ATM or make a purchase. That almost all of it goes to leveraging deposits so that they can make more mortgage loans. It's the reason why property prices are always going up, is because 40% of all the money in the world is leveraged in order to make mortgage loans. And so when you have almost all deposits and almost money being used to push up an asset class, you always get increase in prices. So that's why property prices, you know, tend to go up in the long term in the major cities. And it's because of that, because banks own your money when you deposit it with them, and they can spend it as they wish. So Bitcoin came along, this very speculative, you know, invention at the time. I think, you know, when I first spoke on it was 2011, and it created the world's first asset class that you can own that's digital. And so it's, you know, other than cash, there's no other form of money that you can own. You know, people were using commodities like gold, but Bitcoin created the first asset class that lives on the internet that you can actually own and that's yours. I.e., if you hold the private key, it's yours. If you give the private key to someone else, it's not yours. And that's kind of, you know, if you give your private key to someone else, that's the scenario where Mt. Gox or something like that replicates the banking system. Essentially, you give the private key to Mt. Gox, and Mt. Gox owns your money, just like a bank. So they replicated banking, essentially. So just to summarize those 2 points is, you know, when you deposit your money at a bank, the bank becomes the legal owner of that money. And when they're the legal owner of that money, they can spend it as they wish. And if they take unnecessary risk with that money, it affects the risk of you being able to claim back the money that is now theirs. With Bitcoin, you own it and you can spend it in a peer-to-peer fashion. But if you give that private key to someone else, then it becomes a bank at that time. You know, it replicates the same thing. The third and final point is actually, you know, the one that helps us draw some analysis about where we might go next. And it's the difference between the monetary policy of Bitcoin versus the monetary policy of almost all, you know, state-owned currencies and monies that represent a country. And that is that every country in the world implements a monetary policy of inflationary money. And inflationary money means that the value of your money, if you don't do anything with it, if you don't speculate with it, if you don't invest it, is guaranteed to go down in value over time and will purchase you less goods. Now, there's some caveats to that. If you're playing in the international markets, you know, your currency might go up or down relative to another currency, and you might get wealthier based upon international flows. But let's talk about domestic. Domestic currency means that if you leave your money at a bank and you don't speculate with it and you don't invest it, then it's guaranteed to purchase you less goods in the future. And you couple that with some of the forces that are happening right now with low interest rates. So low interest rates means that you get less money on your savings. So saving is a bad strategy. And now that moves to negative interest rates, where it actually costs you money to actually hold the money at the bank. And so you're guaranteed, if you leave your money at a bank, to actually your purchasing power decrease over time, and therefore you have to work harder in order to actually increase those savings at a faster rate than your money is actually depleting. And that's called inflationary money. And that's how every currency in the world works that's created by a government. Bitcoin is a deflationary currency. Now, call it a currency, call it an asset class, call it whatever you want. But for some people, it's a currency. And the monetary policy of Bitcoin, as you've pointed out in many of your shows, is designed whereby new Bitcoins are created every 10 minutes. And every 4 years, those number of Bitcoins halve. So it means, you know, when it first started in 2008, there was 50 Bitcoins every 10 minutes. Then in 2012, there was 25 Bitcoins every, 25 Bitcoins every 10 minutes. And then in 2016, it went to 12 and a half. And your favorite year, 2020, is going to go down to 6 and a quarter. And so what this means is that the money supply of Bitcoin is increasing at a slower rate all the time. And by 2140, they'll all be created. And, you know, over half of them have already been created now. And a lot of them are lost. So the supply of money is always decreasing. Translate that into, as long as the demand for Bitcoin always outstrips that supply, then the price goes up. At times of uncertainty, like the scaling debate that we're experiencing right now, the supply might be increasing at a rate that, you know, where the demand is actually decreasing and everyone's selling off their coins because they're a little uncertain about the future, and then the price goes down. But as long as Bitcoin scales and as long as Bitcoin continues to be useful, and, you know, there was a point of inflection around 2013 after, you know, where Bitcoin went into a bear market and it really went down, where the demand for Bitcoin stopped being non-speculative, and people were using it not because they were trying to make money out of Bitcoin. They were using it because Bitcoin is a great way of transferring large and small sums of money all around the world. And it was a great way of purchasing things where there's censorship and owning your money and spending your money as you wish. And so, you know, throughout that bear market, the demand, the real utility of value actually came into play. And so when we're talking, I know I'm taking a bit of a digress here, but I think it will come together. You know, when you're talking about how you analyze an altcoin can increase in value based upon pure speculation, pure speculative demand, and it can make you a lot of money. And when that speculation stops, it can lose you a lot of money depending on the trend. But an altcoin only has value in the long term if at some point utility value, i.e. people using that altcoin for something that's not trying to make money, becomes greater than the increase in the money supply and the speculators that are selling it. And so Bitcoin at the moment, and you could actually put Ethereum into this category because of the ICO bubble at the moment, but Bitcoin is the only currency where no matter what happens with speculators over the long term, the demand is greater than the supply over the long term because it has utility value. You know, Ethereum's kind of been put into that category because now people will have to buy Ethereum in order to invest in ICOs, and that's created a semi-non-speculative, but the user case is still speculating on something else. But there is a demand for Ethereum because of this ICO, you know, but that can change, that can move to another blockchain, and, you know, everything can change very quickly. But this is the properties of a deflationary currency. And I would say in 2014, Bitcoin went from a speculative deflationary currency to an actual deflationary currency. And by deflationary currency, it means that the whole world, as the way we're talking about blockchains, as they were talking about altcoins, as they were talking about Bitcoin, started to recognize that this asset class has a fixed money supply, the principles behind it are of sound money. And as more and more people started to believe that and invest in it, it became a self-fulfilling prophecy where the demand continually outstripped the supply. And we went from a couple of $100 to, $2,000 where we are today. And, on massive amounts of demand and utility. So this is a deflationary currency. What the difference is that with your traditional money, you don't want to save it. You're encouraged. The smart decision with traditional money is to go into debt, because your debt, if the value of your currency is going down, then the value of your debt goes down in the future. But if you save money, then the value of your savings goes down, and therefore everyone is encouraged to go into debt. Couple that with the fact that the way digital currency, see, again, I don't want to confuse people here too, but Bitcoin didn't invent digital currency. The banks invented digital currency. The banks invented digital currency because it was a digital representation of paper money. And the paper money is created by governments debt-free. And it's sold to a bank and they put it in the ATM, and the government benefits from all that income when they sell a paper note to a bank. And that is actually, added to taxpayer revenue, and it increases the balance sheet of the government. Digital currency, i.e. the digital representation of the money that your government creates, which is, US dollars in online banking, or renminbi in online banking, or pounds in your online banking, is actually a digital currency that's created by a bank. And the rules of banking state that when you have a banking license, every time you issue a loan, you're allowed to create some new digital currency. And if anyone repays that loan, that digital currency disappears, but the banks get interest on top of that digital currency. So the way that, and this represents 97% of all money. So the government create 3% of money, and the banks create 97% of money. And that the money that the governments create is cash, notes and coins. And they implement policies through central banks in order to determine and control and manipulate how much digital currencies banks create. And that's why they change interest rates, because it changes the amount of digital currency a bank creates. And this digital currency is what you see when you log into your online banking. But the property of it is that if you have a positive balance in your online banking, it means somebody else has to have a negative balance, because that digital currency, pound or digital US dollar, could not have been created unless someone went into debt. So, they loan the money, then the new currency gets created. So therefore, anyone that's got a positive balance means that it's matched with somebody else's negative balance. And so this creates systemic risk in the banking system. And it means that nobody wants to save, because the sensible strategy is to take on debt. And it also means in order to stimulate the economy, you have to have more debt. So governments want you to take on a mortgage, take on a student loan. They want companies to take on more. They want and when no company and no individual will borrow, they have to borrow, which is what happened in the financial crisis. They come in and they take on all the debt and they borrow more. And so this causes systemic risk in the financial system. So to summarize, traditional money, banks own it, banks spend it, it's inflationary, which means your purchasing power decreases over time, and it has systemic risk on it because it's all backed by debt. And eventually that debt, if you repay that debt, money disappears and the economy crashes. If you don't repay that debt, then eventually you have to take on more debt, and you end up in a situation where eventually you can't repay it. So you have a business cycle, boom, bust, boom, bust, boom, bust. And with every bust, the government steps in and takes on more debt, which is why if you look at something like the Federal Reserve, in 2008, it had $600 billion of debt, and the economy crashed because they had too much debt, and the global economy crashed. But now, today, they've got, I think, approximately $5 to $6 trillion of debt, and the same problem. So that creates systemic risk. And that systemic risk at some point has to have two things. Either, the economy crashes and they let it happen, or they create a new financial innovation in order to save the economy. And this is why I don't think the economy crashes. The economy certainly crashes, but it doesn't turn into the Armageddon zombie apocalypse. The reason it doesn't is because, they will always create a new financial innovation to step in rather than everyone losing their money. And that's what we've seen over time. Now it becomes more and more unsustainable. and eventually you have to come up with greater and greater innovation. But we don't have that challenge in Bitcoin. We have different problems. With Bitcoin, you own your money, you can spend your own money, and you can do it peer-to-peer, and the money's deflationary. So as long as we don't split this coin, and as long as Bitcoin scales, you have a global savings account that we've never seen before, that will never change in supply, and is a global scarce good. And as long as the demand always outstrips the supply, this is going to go up and up and up all the way through to 2140 and beyond. There are two caveats. The risk of Bitcoin is, does it scale? And that's what we're solving today. And can it keep up with the demand? And that's really the only two things. Because its ability to scale is what determines its success, really. And that also translates to all the others. So, that gives you kind of the foundation knowledge for us to be able to create some forecasts about what might happen, under different scenarios of what's coming ahead. So I hope that, that's a lot there, a lot of I throw on. But
well, I wanted to say that was beautiful, and that you said it's a global savings account. I mean, that's what I've been saying too, and you just you reinforced it with a lot of facts. Everyone, pound that like button if you like where this conversation is going. So, under your scenario of what an economic collapse is, what would happen to Bitcoin in an I know that. What would happen to Bitcoin in an economic collapse, and how would the central banks react?
So firstly, you just got to understand the situation we're in today. So the situation we're in today is that, the banks have screwed themselves by pitching blockchain. The biggest mistake they made was telling the world about blockchain, because it gave a global marketing strategy to the only blockchain that works, which is Bitcoin. And so all fund managers, all people all around the world, they all create their blockchain things. None of them happen. And then they all start learning about Bitcoin. And, every fund manager that I've ever spoken to, every high net worth investor I've ever spoken to, after the talk, they all go off and they buy Bitcoin. Because it's like, Bitcoin's the first investment where it's created, digital scarcity we've ever seen. It's so much better than gold as long as we can scale. Gold is not as scarce and doesn't have many of the properties. So all around the world, people are investing in Bitcoin. Now, there's one thing that's holding them back right now is that, what the hell's going on with all this scaling? I don't quite understand it. So a lot of the world is watching and waiting for this scaling debate. If we get through scaling, the influx of money into this sector will be unparalleled, in my opinion, to anything we've ever seen. This will be just a ginormous influx of people realizing that there's a deflationary currency. We've got the credibility now. The banks have all told everyone about blockchains, and all those blockchain projects will fail, and it won't do much interesting things for many people. But at the end of it, it's become like the global marketing budget for Bitcoin once they get through this whole process. So the world knows that now. There's no turning back. That this invention is what I call a black swan invention. Bitcoin will not be created again. If we screw it up now, it won't happen again. The reason for that is because everyone that's tried to create an alternative to Bitcoin doesn't have the properties of Bitcoin, and no one can create it today. If you can't, the reason Bitcoin succeeds is it got hash power, incredible amounts of hash power at a time when, the world wasn't watching. It got, yes, some of the hash power is centralized to a certain degree, but if you bombed one mining farm, another one would pop up in Iceland or something like that. So it's got incredible amount of security behind it, unparalleled security to anything else we could ever see. And what we've learned from this debate is that it truly is decentralized. If it wasn't decentralized, yes, there's certain parts of Bitcoin that are centralized. There might be centralized mining, or there might be centralized businesses or whatever. But the one thing we know is that the reason that Bitcoin hasn't made massive changes yet is because for 3 years, everyone's realized I've tried to control it and I don't control it. The miners have tried to control it. The businesses have tried to control it. Special interests have tried to control it. Governments have tried to every type of player has now, hackers have tried to control it. Every type of player has tried to control it, and they cannot get their way. And so the one thing that everybody's pitching alternatives to Bitcoin on is, okay, Bitcoin doesn't scale, Bitcoin can't change, that's the very thing that makes Bitcoin scarce, a digital asset, and the only store of value that exists in a digital format. And so that exists today. We've got this digital, store of value. And the reason that I'm so against, and I know I'm dropping around from topic to topic, but I'll get back to the original question. The reason I'm so against a coin split and a chain split is because it calls into question the deflationary value of Bitcoin. If Bitcoin can split and be 2 coins and the money supply doubles to 42 million from 21 million, then that calls into question my entire analysis. And so the community, we need to make sure that that does not happen. And I don't think it will happen. And the interesting thing that we're seeing in scaling right now is that if that does happen, it needs to be very, very clear that the alternative chain that comes from this split is an altcoin. If there is 2 versions of Bitcoin, if we have to have a split to figure out how to scale, and it turns out the market's going to determine how we scale, then it has to be clear that one of them is Bitcoin and one of them is an altcoin. And then if the altcoin succeeds, great, it's got the properties of Bitcoin. My guess is that it won't succeed because it will be driven by 1 or 2 or 3 people. And it will be like an altcoin, which is centralized. Every altcoin can change very quickly. They can change the monetary policy. They can decide, a few people can get together. If it's proof of stake, there's a few rich people that own the coin. And they all are driven by an individual behind it. The reason Bitcoin works is because it was created by someone that we don't know. That's purely one of the main reasons why Bitcoin is a store of value. If it wasn't, then it wouldn't be a store of value, because we'd all be running to Satoshi right now, as some people are running to Craig Wright saying, what should we do? What should we do? And we're seeing what happens when Bitcoin is a centralized version, where they're trying to fork off into a different direction. And some people believe that this person is Satoshi, and people are going to Satoshi saying, what should we do? What should we do? And Satoshi saying, we need to do this, we need to do that. No one tells gold what it can do. No one directs the future of gold. Gold is just gold. And that's why if Bitcoin can't get through the scaling debate, we call into question the things we believe. But what we're seeing in the market right now is that Bitcoin is figuring out genius solutions. And, people say to me, lots of people are victimized, saying this person's a victim, this person's a shill, this person's screwing up Bitcoin. But I'll tell you one thing, those people were all needed to get us to a solution. The reason we're at a solution right now is because, say what you want about him, Roger Ver pushed this forward and said, if you don't make those changes, then here's my version of Bitcoin. And that drove a debate to the next stage. It was debated for 2 years. Then the miners said, you know what, we're going to back this version as well, which scared everyone into making different solutions, and the whole market comes together. But in the end, I am almost certain that we won't get that chain split. We will get that single version of Bitcoin. And this is too important to too many people to screw it up. But we're playing game theory, and all these people are coming up with different solutions. But in the end, no one controls this shit. And that's why Bitcoin works. If someone controls it, then, take this analysis and we might as well start talking about gold again, because nothing else, it can contribute to this conversation. Everything else is a centralized extension of Bitcoin. Look, I'm not saying don't speculate on things. Do whatever you want. If you want to make more Bitcoin, then speculate on Ethereum. If you want to lose more Bitcoin, speculate on Ethereum. If you want to make more, Bitcoin, then speculate on Zcash. But I promise you, when people make or lose money, they go into Bitcoin. Now, originally, Bitcoin was very speculative. Originally, people were only investing in Bitcoin to make more dollars, or to make more renminbi, or to make more pounds. But in 2014, that shifted. In 2014, Bitcoin became this store of value. It had, real demand. It had real user cases, non-speculative user cases, and people took their fiat and wanted to hold it in Bitcoin. I want as least fiat as possible and as much Bitcoin as possible. The only reason I hold fiat is because I need stable money to pay my rent, to pay my mortgage, to pay whatever expenses. You still need stable money. Bitcoin is not stable money, and it never will be stable. And by the way, if you want stable money, if you want Bitcoin to be a good currency, you're asking for it to stay flat in value, and then it's no longer an interesting store of value. It's It's a fixed money supply, stable money. And you don't want that. You definitely don't want Bitcoin to be a good currency. A good currency is stable. You need stable value to have a good currency. We don't want that in Bitcoin. We're creating a digital savings account that you can spend and convert into fiat as you need to make stable expenditure. And as long as the demand's greater than that, then this is what's been created. And you can do all your payments. You can do inventions on top of that. But store of value is the game changer, no doubt about it. It's the thing that changes the world, and leads into my analysis of where we could go next, even though I haven't even started the question. So should we start the question of what would happen under
yeah, please,
what are the possible scenarios?
Everyone is wondering, so pound that like button. I mean, you built it up real nice to this point, and I got to say, I was cheering you on so many things that you said along the way. So I mean, so many things that I have tried to bang into people's heads, why a split is complete nonsense, and just the importance of the deflationary aspects of the coin. And it just seems like we have so many new people entering the space. They don't really understand some of the basic concepts that you just covered. So I hope people were paying attention, and if they weren't, watch this show again, because he just gave you education on what this is all about.
I'd like to challenge those people, and I'd like to say, are you really holding an altcoin as a store of value? My guess, I could be wrong, but my guess is you're holding that altcoin to make more Bitcoin, and you're going to store, and if it pumps 1000x tomorrow, you're going to get that straight into Bitcoin. And some people who are new to this sector will go straight into US dollars, or straight into, because they're not true Bitcoin believers yet, or they haven't figured out that it's a store of value, or they just need stable money to pay their mortgage and buy their house and do the things that they're going to do with their profits. But most people will take their altcoin. If it pumps, they'll put it back into Bitcoin. If it crashes, they'll put it back into Bitcoin. And people are taking their fiat today because it's inflationary money. And they're holding a portion of it to make their expenditures, but they're putting a big chunk of it in Bitcoin as a store of value. And once we get through scaling and this becomes a bit clearer, they'll put more and more and more of it. So the influx of money waiting to come in is huge. But let's look at what's real today. Well, what is real today? There's kind of two real, tangible problems with our traditional money that are very real risks that people need to be, looking at and understanding. The first real risk is war on cash. That's a very real risk. India has shown that they are willing to confiscate a ginormous chunk of their nation's savings and give them an unreasonable period of time to stand outside a bank and queue outside a bank and risk being murdered for their life savings with a bag of cash in order to put it into the banking system so that they can convert government-created money into the digital rupee, digital currency rupee at a bank. And then from there, the government can trace, track, and control, the people's savings and tax it and do whatever they want with it. And that's a very real thing. Australia wants to do that. UK wants to do that. Europe wants to do that. America wants to do that. Cash is one ginormous pain in the ass for governments. They've already figured out how to make money without what's called the seigniorage income. I know that printing money makes a central bank money, but it's insignificant compared to currency manipulation and currency control that you can do with digital currency. And sorry, I might, when I say digital currency, I mean digital fiat rather than Bitcoin and things like that. So the war on cash is a very real thing. War on cash, as we've seen in India, we're investors in CoinSecure and Uno Coin and the exchanges in India, the Bitcoin exchanges in India. And they just got a tremendous increase in volume as a result of war on cash. It gave a world a reason to actually discover Bitcoin, because in India, they still understand the value of privacy. They still understand, the value of actually owning your own money, not having someone else spend it for you. Although it was subject to an inflationary money supply, and that's why gold was such a big asset class in India, and Bitcoin will become a bigger and bigger and bigger asset class in India, because gold is still, a kind of a gold. To me, gold is kind of useless as long as the internet exists. While Bitcoin and the internet exists, then gold is just going to be less and less interesting. If the internet goes down, if there's some crazy freak event, then gold becomes really, really interesting again. But until then, or if Bitcoin splits even, I believe that we've reached a phase right now where if Bitcoin splits, fails, can't scale, then that will create an increase in the gold price. That's the level that I think we're actually at right now. But I don't think that's going to happen. I think the community, because it's not centralized and it's not controlled, we'll get through this and we'll get a real great solution. But that's the first thing. So every country around the world is going to wage war on cash. They don't want you to hold cash. They want you to put it in a bank. And when you put it in a bank, it gives the banks the ability to leverage that money supply many times further and increase debt levels. And when you increase debt levels, it means that you build an economy again. You get an economic boom based upon debt. And so India, China, and the rest of the world are doing this, and they're following the US strategy. The US strategy followed the British strategy when it invented Bank of England in 1694. And then Federal Reserve copied, the European central banking system in 1913. And then ever since then, you have, economies built upon debt. And so China, an economy that used to be built upon savings, is following the same strategy. And they will become the 21st century superpower because they're going to build their economy on debt. And they're going to, and then the debt cycle is reaching, the end of the cycle in the US. Now, still, US dollar to me is still the best currency. It's the most used currency. It's the most widely adopted. It's the most useful fiat currency. And if I'm saving money in fiat currency, it's still going to be US dollar. Just simply because you can spend a US dollar in more places than you can spend any other currency in the world. And so, what that creates more systemic risk. So remember the properties of the banking system. They own your money, they spend your money, and they want to continually increase debt in order to increase their profits. So that eventually reaches the phase where people can't afford to repay their debt and money supply disappears. And when money supply disappears, as we saw with the subprime crisis in 2008 and the Icelandic crisis, you get a big flow around the international banking systems because all of them are built upon each other. And so therefore you get a big flow. Now, here's the thing. What happened in the past when people's money were at risk? So, banks realized we no longer, we owe people a load of money, and we either completely take that money, called a bail-in, which is what they chose in Cyprus, and that drove Bitcoin up in the Cypriot crisis. Or we bail them out, which is what they chose in the States and around the world in 2008 and beyond. Now, the governments decided to take on that debt, do the bailout, and use central banking in order to take on that debt as well. But I don't believe this will happen again. Some little crazy, weird event will happen. Last time it was Iceland. Who the hell is Iceland? But, Iceland became, the catalyst for this ginormous, crazy risk. It will happen in a place we don't expect. Maybe Italy will have some kind of, over indebtedness or something that affects some, bond market in Greece that then affects the American credit default system, swap system, and just something you don't expect. But it could be student loans, it could be credit card loans. One of these markets will have another subprime, black swan event. And then at that point, everyone, the banking system is at risk of everybody losing their money. Now, that won't happen. That we won't hit zombie apocalypse. People won't lose their money. But what tools does the government have? So, before they decided to use interest rates to try and keep interest rates down and discourage savings. Before they used the central bank's balance sheet and quantitative easing and various other policies. But this time they've got a new tool, and that tool is digital currency. And the digital currency that I'm talking about, and I know this can get a bit complicated, is a digital version of the national currency, but this time not created by banks, not backed by debt, created by the central bank and not backed by debt. And so really, it's just a new form of money. So let's kind of play this out. Imagine you have deposit at a bank and they get in systemic risk and they won't give you your money back. They could do what they did in Greece, shut down the ATMs, or they could do what they did in Cyprus and just keep your money to recapitalize. or they could pass it on to the government. But this time, what I think they'll do is, I think that there's no appetite to bail in and there's no appetite to bail out. You know, people just won't have it. They will riot. It will get crazy this time. You know, but there's no chance of a bailout again. But what they will do is the central banks and the governments will say, do you know what? Screw you, banks. We're not going to bail you out again. We're going to let you go bust. Now, in the current economic environment, you can't let a bank go bust because everyone loses their deposits and the economy crashes. But what a central bank could do is they could take their digital version of renminbi or US dollars and say, okay, everybody that has an account with this bank, please download this app now. And if you download this app, and we have a database that we got from, you know, Barclays Bank or Citibank, and we've got a record of all your balances. We're going to take that balance that you had and we'll deposit it into your, you know, your wallet. And this wallet is a digital currency. It doesn't have a block. Any central bank that thinks they're going to use a blockchain, you're crazy. You know, they don't want a blockchain. They definitely don't want transparency. They definitely don't want to give up their income to miners. And if they're not giving up to their income to miners through proof of work, then it's not a blockchain. They're just calling it a blockchain. It's a database, okay? They definitely don't want blockchains, but they do just want a digital representation of their own currency issued by a central bank. Now, what does this mean? It means that central banks can now allow retail banks to go bust and consumers don't lose their money. And so this is how you replace one money supply, a debt-based money supply created by the banking sector, with another money supply so you don't crash the economy, which is debt-free money created by a central bank. And I'm pretty sure they will do it. And for those of you that have ever been to China, what will that app look like? It will look like WeChat. It will look like your Bitcoin wallet, but it will be different. You know, it won't have, it will be a fiat currency, a stable currency with that economy. And it won't have a blockchain, but it will just be databases that the central bank controls that you send across from person to person. But the big major difference is the central bank will sit in the middle. Now, when the central bank sits in the middle, what you have done is you've created a less private, a worse version of banks creating digital currency. Because at least with the banking system, you are one step removed from the government, and the government, if they thought you owed them tax, they'd have to get a subpoena. They go to the court system. You know, they have to persuade the bank to give up some of your privacy. And at the end of the day, the bank doesn't want to do that. They just have to do that. And, you know, you end up in a scenario like IRS trying to get Coinbase to give up all the data, and they're saying no, and it goes to court. At least you have court. When central bank is your bank account, that goes. Automated tax collection. It means if they think you owe money, they take the money, and then you have to go to court and prove that you don't owe the money. It means that if you turn up at a border and someone else has stolen your digital wallet and they went on and bought a load of stuff, you know, they, just like the bank at the moment, if they think fraud's committed, they shut down your account and you have to call them and explain, hey, I'm in China, I'm doing this. But when the government does that, that's a very dangerous scenario. You know, that's a horrible form of money. So then you've got to look at, okay, let's get to the final point here. You've got to look at, you've got these competing forms of money. Cash disappeared, government got rid of it. Digital money at a bank, systemic risk, backed by debt, that system imploded. Then you have central bank digital currency. No privacy, the ability to switch off and fully control. But it does have a major advantage over a currency like Bitcoin. And that is that it's stable. You know, and by stable, I don't mean stable in the international markets when you're exchanging US dollars to renminbi. I mean stable in the fact that your bread costs you the same price in the next few months. And there's a small amount of inflation where the price goes up slowly over time. But it's still that inflationary money, but you've taken out some of the systemic risk because it's not created by debt. And so people, that's useful. You know, if I want to buy bread, I'm going to use a fiat currency. I'm not going to use Bitcoin where my bread, you know, depending on what the scaling debate outcome is, it costs me half or twice as much. I might do because it's just a small amount of money, but I'm going to use fiat currency. And so what the end result is that if you have these two forms of money competing, you have the ability for people to exit the central banking monetary system. And the downside is that they have to accept volatility short term, but they get a deflationary form of money that increases their wealth over time. And so with Bitcoin, it encourages you to save. With this central bank digital currency, it doesn't encourage you to save. And it's controlled. And so what you will do is you will store the minimum amount of money that you need in stable currency. And you will take your savings and you will put it in, some kind of store of value. That store of value might be gold or it might be something else, but Bitcoin's making gold less and less interesting as a store of value if this continues. And so that perpetuates, and this is why if Bitcoin scales, to me, Bitcoin is the cheapest asset class in the world. It either is worth nothing because it doesn't scale, or it's worth $100,000, $1 million, because more and more savings and asset classes come into this thing if it scales, because it is deflationary, digital, scarce asset. And that's why it's really important for me to protect that at the moment. But then something really interesting happens as well. Well, the central bank they don't want to do customer service. They don't want to do all the things that retail banks do. They don't want to be customer service for the entire economy, the entire currency. So what are they going to do? Well, this is kind of what I talked about in Bank to the Future, the book. Fintech companies will build on top of the central bank's API key. And fintech companies will just replace banks. The money supply will be created by the central bank, and the customer service will be done by fintech companies that are creating apps and peer-to-peer lending and all this type, every single financial service and blockchain services and all this type of stuff. There'll be loads, every single financial product that exists in the banking system is going to be recreated by a fintech company right now. And you're going to have so much choice. You're not going to be stuck where you have to go to a bank. There's going to be service after service after service. And some of those will be good, some of those will be bad, but you'll have central bank that creates the money supply. You'll have fintech company competing to create financial services without special banking licenses that gives them privilege and monopolies on money creation that, if you take away, collapses the economy. And then you have this amazing force, and this amazing force is Bitcoin, which keeps governments honest with their currencies. So we're going to have better fiat currencies as a result of Bitcoin. Because governments know if they abuse digital renminbi or digital US dollar, then you get an influx into Bitcoin. And Bitcoin becomes more and more value. And that becomes, just the market cap of Bitcoin goes bigger and bigger and bigger. And then you have all the, and that's to me where it will go next. So you won't get the zombie apocalypse. If Bitcoin fails, then gold becomes the store of value. It just is. If Bitcoin doesn't fail, it's just this amazing asset class. There's a digital savings account, and every scenario points towards the destruction of banking, the creation of fintech companies, and governments trying to control you.
I have never heard someone put the creation of what amounts to be Fedcoin in such a positive light, and it makes sense though, that. I'm a person who always likes to look on the brighter side of things. You just gave the brighter side of if the government does go down this route for whatever reason, and we're stuck with this Fedcoin thing, the smart people will still save in Bitcoin, and there will be opportunity with this Fedcoin wherever you are. I mean, this is quite a fascinating interpretation and look at this possible scenario that I really is opening my mind. I just wanted to say that was great.
This is why, and I said, and this is, I'm going for book 2 right now, because the 2012 I started, writing, well, 2011 it was, started writing about Bitcoin and things. Can you imagine how much has changed since 2011? But that is, I say, if you understand the rules of finance, technology, and money, you're ready to prepare for this in any way. The outcome is good wherever it goes, and there is a real positive, outcome here. I tell you what's tragedy. The tragedy, and this would probably be the only thing that could send me into depression in my current excitement level of where we're going right now. But the tragedy is if we fuck up Bitcoin to try and make it a currency that you can spend on, ice creams and that actually creates a scaling debate that breaks Bitcoin. That's the tragedy. That changes the scenario of everything. And so that's the thing we need to fight against. And so, you know, what stops this future is that the entire, even you talk about, you know, okay, if Bitcoin fails, something else has come along. No, the Bitcoin is the only store of value that has all the properties that it's not centrally controlled. Any currency created today will be centrally controlled in some way. It will be dependent upon the person, because if someone comes along right now today and creates another version of Bitcoin with an anonymous founder, everyone's just going to say scam coin, scam coin, scam coin. No one's going to mine it. It's not going to get secure. You know, everyone's going to call it one coin or whatever it might be. You know, no one, even if they created all the properties of Bitcoin, this is a black swan invention. It's not going to happen again. The only way to make an altcoin work today is to attach a credible personality to it. So that credible personality can push the coin. And, you know, credit where it's due. You know, Ethereum's amazing what they've achieved with it, really. You know, Vitalik is taken his reputation and created something that's attracted an incredible amount of hash power and created an interesting experiment for Bitcoin to learn from, and created this new thing that might create smart contracts, but believe me, it's not a competitor to Bitcoin. It's nothing like Bitcoin. Nothing is like Bitcoin. And if we had to create another one from scratch right now, it just would not happen. We'd all call it a scam coin. We only get one shot at this. You create a better version of the internet right now, but there's still only one internet. You know, someone might create the decentralized, you know, whatever internet, whatever. But what I'm saying is, it's highly unlikely we will ever get another Bitcoin. It's just not going to jump to another altcoin or something.
I love that. We only get one shot, and this Bitcoin is the shot. You bring up great points to support that theory, and I wanted to point out that earlier on you said if there is even a minor split here, and the China coin is created, that we have to call it China coin. We have to say it is nothing but an altcoin. They're not two Bitcoin. There's an altcoin called China coin, and then you have Bitcoin.
I'm gonna push back on that, because I spend a lot of time in China, and I know the
people. Okay, you don't like the name. Okay.
These are, you know, there are people that share many of your common views that live in China. It just happens that there's, you know, certain companies. You know, and I don't like the word China coin, because I think it brings an emotion of hating, you know, people from certain geographies, right. When the reality is everyone's, you know, we all do it. We all generalize. We all put people into categories and boxes. But one thing I always challenge myself on is to think past those stereotypes and to think past those generalizations. Because I think it makes me a better person. I know we need to do them because that's the way our brains work. We sort through information. But let me push back on that.
Yes, so that is a good point there. It doesn't have to be called that name, but just another name. But you know, you bring up a point. There is a lot of animosity right now out there. They're the scapegoat at this moment, and I want to hear what you have to say about. What do you think the odds are that everything's going to turn out right? And during your travels through China, which I want to talk about, do people seem worried? Are they even aware of the scaling debate? Are they as worried as the people in North America?
The vast majority of Bitcoin savers, let's call them Bitcoin savers, don't know anything about what's happening with Bitcoin right now. You know, maybe they've lost their coins. I mean, but, you know, for example, a Bank to the Future, it's a funny thing, you know, the people, this is a strange market, the people that have made the most money at Bank to the Future get about their daily job, and they suddenly log back into their account after 2 years and holy shit, is that how much my portfolio is worth? Or is that how much my Bitcoins are worth? You know, the ones that are doing what we do, which is, you know, analyzing every single move and trying to stay up to date with everything. We can get caught up in the emotion and fear and doubt and uncertainty, and we can make wrong decisions. And you know, I don't think that's a good thing, because you shouldn't. I'm not pitching be ignorant, but what I'm saying is that a lot of money is going to be made just because people aren't following this scaling debate. You know, they're gonna log back into their Bitcoin wallet in 5-10 years time and realize they're ready to retire. You know, and that's kind of what the majority of people. But then you've got the Bitcoin users, and Bitcoin users, you know, we're responsible for making sure that we're doing everything within our power to protect Bitcoin's monetary policy and at the same time scale. And, you know, I have tremendous, call it cup half empty, ignorant faith that there's enough people that care about Bitcoin that I could never have, forecasted some of the things that have happened. But I believe that everything that's happening right now is happening for a reason. And it's happening for a reason to make Bitcoin scale at the exact right time that it needs to scale. And right now, it might be, I believe that there is an invisible hand or an Adam Smith force, or call it whatever you want, or a spirit, or whatever you believe. I believe that this invention is too important, and there's enough people that care about it that we've got really, really smart people that you might think are trolls, you might think really intelligent gurus, but there's enough of them that Bitcoin is not controlled and it's decentralized enough that the collective intelligence of all these people are going to produce the right outcome. And I'm seeing that in the scaling debate today. Now, I can't tell you where the game theory outcome is. I can't tell you what the next move is. I can't tell you what's going to happen next week. All I know is that it looks to me like we are going to have one Bitcoin. We're not going to have a chain split, and we're going to have Bitcoin that scales. I just can't tell you how.
Yeah, I totally agree. I mean, it's going to work itself out. That's what I've been telling people, not to worry about every single. I mean, because if you get into this too deep, you're worried about every little change that happens, every little rumor, and it's not worth it. I take your approach. I totally agree. Right there.
Yeah, if I was looking at everything, I would have sold my Bitcoin when Bitcoin Unlimited came through and Vinny Lim told everyone to sell. Or no, he didn't. Sorry, correction. He didn't tell everyone to sell. He sold his own Bitcoin. Because that was the rational thing to do if you're actually following this market day to day. And I would have sold, when ASIC Boost came out and all this stuff. But I can tell you for a fact, I haven't sold a Bitcoin. Look, I pay our staff in Bitcoin. I spend Bitcoin, and I'm kind of dictated by whatever the price is at the time. But the core savings account, that's staying, and there's going to be a moment. We're either going to know Bitcoin doesn't scale. And by the way, if Bitcoin doesn't scale, it means blockchains are over. We're going to have centralized databases and weird things that people create. But blockchain, this blockchain thing was not a success if Bitcoin doesn't scale, because everything else is dependent upon Bitcoin scaling as well. Whatever EOS comes along, whatever Tezos comes along, whatever comes along next, it all needs Bitcoin as a store of value, because they might solve some user case that I'm not aware of right now. But they won't solve store of value. None of them will. Nothing will. It will go back to gold if it's that. And so, it will I believe it will sort itself out. And we're going to know, and I will either be, losing my entire savings that are held in Bitcoin, because it turns out Bitcoin doesn't scale, and it was somewhat centralized, and these people did actually manage to control it in a direction that wasn't decentralized. Or, the outcome that I talked about is happening. The Bitcoin becomes a global savings account that tracks more and more of asset classes. And with every single banking system collapse, every single financial crisis, every single war on cash, every single, black swan event in traditional money, every single move by the central bank drives more and more people into looking at Bitcoin and investing in Bitcoin. And, the downside right now is that you lose $2,000 whatever, $300 per Bitcoin. To me, the upside, the other downside is that you try and be a trader and you think that you can trade and you lose all your money, and you put it all into some kind of ICO, or you put it into an altcoin. And hey, maybe you make a shit ton of Bitcoin doing that. So a lot of people have. But I know, because I was in the market. I left, in 2006. I was 2 years as a market maker on the London Stock Exchange. I know, I've seen the markets. We make money out of the 90% of traders that lose money. And 10% make money out of the 90% that lose. And the 10% that make money are insiders at the investment banks, or insiders that are doing inside trading because they're, they work at the, they got access to information that you don't have. And 90% are there to feed the 10%. So if you're trying to figure out where the bottom of Bitcoin is, you might get it right once, you might get it right twice, you'll get it wrong the third, fourth, fifth, sixth, seventh, eighth, ninth time. You don't know where the bottom is, you don't know where the top is. All you can do is save it and spend it when you need it, but but remember, it's encouraging savings.
I got to say, when you just said the 90%, this is for all the traders out there, the 90% are out there to feed the top 10%. It's not a winner's game, people. He's real. He's been there before. Pound that like button if you like truth statements like that, because you guys got to deal with reality. Some of these people who think they're traders, you're just going to be one of the 90% that's food for the freaking.
And remember, making money in a bull market doesn't make you a good trader. It makes you lucky. You know, if you can make money in a bear market, then you might be one of those 10%ers. You know, and there are 10%ers out there. Maybe you're a trader, but here's the thing: traders, they don't do anything else. It's their full-time job. They don't do anything else. You can't go to work and be a trader. You can go to work and be an investor. You can create video content and be an investor. You know, I mean, you watch Tony Vase, don't you? Tony just said, I can't freaking trade because I decide that creating content and following Bitcoin's more interesting. And that's true. It's a trading. The 10%ers aren't doing anything else. The 90%ers are either investors or they're just traders losing money.
So let's talk about someone who has done well financially in his life that you've been hanging out with. Jim Rogers, a legendary investor. You've been traveling through China with him. Tell us his thoughts about Bitcoin and cryptocurrency, and tell us how it is to travel around with him. What type of insights have you gotten?
Yeah, so Jim is an incredibly interesting person to be learning from about traditional markets. One thing I have learned is that it's amazing how disinterested I've become in traditional markets once I discovered Bitcoin. And you know I try and stay up to date to traditional markets, but my interest just waves and waves and waves because just Bitcoin and crypto is. I just never met anything so interesting in my life. It's just, and I never stopped learning from this market. And the scaling debate, my knowledge is just shot as a result of the scaling debate. I really was, I understood the economics, but I didn't understand much about the technicals. And now I do understand a fair bit about technicals, not enough to really understand how to make Bitcoin scale, but enough to understand the intelligent people that know how to do it. And so Jim, he believes that China, at the moment, US dollar is your best bet. It's the most stable currency. He's a gold bug. So he believes in gold because he believes that the US is creating, reckless monetary policies at the moment. He believes everyone else is creating worse monetary policies, but he believes that China is certainly going to be the next major superpower, and he's teaching his children Mandarin, and he's living in Asia. He believes US dollar is still the best currency. But I sat down with him. I got him a hardware wallet. I showed him how to, get some. I showed him how you can actually own your own private keys. He's fascinated by this. His words were, there's no doubt in my mind that digital currencies are the future. I explained why Bitcoin is the only real digital currency, that everything else is kind of a speculative way of making more Bitcoin, or experimental way of fulfilling different user cases. But there's only one store of value. He's going around. I'll publish some videos at the end of this tour. I'm not allowed to until the tour's over because we've got another 8 events to speak to together. But I've got him on video saying this changes everything. Banks will be replaced by digital currencies. Digital currencies are without a doubt the future. Everything that the computer touches is going to change everything. He goes, but my challenge is I'm 75 and I barely know how to turn on a computer. So, and that's kind of his scenario. And a lot of people are in that scenario. So they need their grandchildren and children to store their Bitcoins for them.
Well, that's good. I'm glad everything's going well on the tour and that you're in the middle of it.
I did get him to admit one thing. I got him to admit that gold is a hedge against the internet collapsing now. So it's no longer a hedge against economic crisis. He believes that digital currency is a hedge against economic crisis. But if the internet doesn't work, then digital currency is useless. And so therefore, the gold is now a hedge against the internet collapsing. So if you're owning gold, the analysis is, do you believe the internet's going to collapse? In which case it might be a good investment. If you don't believe the internet's going to collapse, then Bitcoin might be a better investment for you. But I have to also caveat that there is risk that Bitcoin doesn't scale. And if Bitcoin doesn't scale, then, that's where you're going to want some gold, probably.
All right. So there's a diversification tip on your part there, what you think about that form of diversification. You mentioned, in the last show, we talked all about ICOs. And at the beginning of this show, you brought up Ethereum's use case as with ICOs. So do you think, it kind of implied to me the positive things you were saying about Ethereum, that you think this ICO thing is going to go on it's going to go on for a while?
This, if you watch my last interview with you, I was talking about all the problems with ICOs, all the challenges of ICOs. Things have changed. I'll tell you what's changed. Hedge funds, venture capitalists, banks, investment banks, all around the world are now looking at how they can use this model. And that may not be a good thing. That may be a good thing. But what it is it means that there's going to be a regulatory structure soon at some point. And that, I believe that it's now reached a critical mass. It won't look like what it looks today. But Bitcoin created disruption in savings accounts, I believe. And I now believe that the derivatives that come from Bitcoin, whether that be ICOs built upon Bitcoin or ICOs built upon Litecoin or ICOs built upon, and it may not even be called an ICO, but it seems that we have now reached the point where digital assets are here to stay. I can tell you what we're seeing at Bank to the Future. Investors are less attracted to investing in equity. Companies are less attracted to raising finance through the traditional means. Bancor raises 150 million for an idea on code that's not tested. Blockchain.info raises 40 million. We're saying, and they're probably valued less than what Bancor is being at the idea. The world is, the ICOs are completely irrational. There's no logic to it right now. There's just absolutely no logic. It's created a great way of making or losing Bitcoin. Or Ethereum, which is then, if Ethereum crashes, is converted into Bitcoin. But it seems like this digital asset class has reached a critical mass now where it's going to stay in some format. And it's changing and it's skewing markets in a big way. It's actually having a major impact around the world. Regulators don't know what to do with it. They don't know how to exercise jurisdiction. They don't know exactly, and if US decides that the SEC is going to come in, then it will all go across to Singapore or Switzerland or whatever, and everyone will just stop taking on US investors, and US investors will use VPNs to invest in ICOs. There's no stopping this right now. Now, it means that if there's no stopping it, it's going to be formed. But the disruption that Bitcoin did, it seems to me right now that there's a wave of derivatives of Bitcoin that are going to create disruption in every single area. And all of these large companies that are building their blockchain user cases, they're probably going to be building it on top of Bitcoin when Bitcoin scales or whatever it is. But I think we've reached a critical mass where, to me, there was a point where Bitcoin to me was like a crazy thing, a Ponzi scheme, a thing that would never succeed. And then there was a point at which Bitcoin was like, holy shit, this might work. And then there was a point at which this is the future. I believe we're actually at that place right now where, holy shit, this might do something. And that, and that is the kind of the place that we're being. And, you've got to look at what happened to Bitcoin. Bitcoin created this unregulated, peer-to-peer, anonymous market where you can do what you want, you can buy drugs online, you can do whatever you want with it. And at the same time, it created the exchanges. It created, where you can exchange for fiat, and that has to happen under a regulated environment because they're acting like banks and they own your money, they can spend your money, and they might be multiplying that money. So you need regulations there. I think the same is going to happen to ICOs. You're going to have, anonymous dark web, fundraising to do things that governments don't want you to do with ICOs. And then you're going to have regulated ICOs where companies are going to actually be taking digital asset classes, and then it's going to go on to regulated secondary markets. And there's going to be very similar rules to what happened. And then London Stock Exchange announced today that they're going to, digital tokenize all the things. And we've reached that point now where it seems that Bitcoin has created a wave of disruption that's led to another wave of disruption that leads to irrational, crazy markets that then lead to, holy shit, this disruption is actually happening, that then lead to two forms of markets, whereas the markets you can't control and the markets you can control competing with each other, just like we talked about with money, Bitcoin competing with traditional money. And what's the end result? Well, when you can do an ICO this way, or you can do it this way, if this one gets very dishonest, you move to this one. If this one gets very dishonest, you move to this one. And it makes everything more honest and interesting. So that's the positive I take from it.
I got to say, you just said some very bold things about the future of ICOs that it pertains to the present with Ethereum, because you were saying, well, maybe some of these will be built on Bitcoin when scaling is solved. Well, the scaling issue isn't solved yet. And right now, this ICO thing is hand in hand with Ethereum. And we just had a drop in Ethereum. But what you just said, and I don't want to put words in your mouth, you have to be, if you really believe everything you just said, you have to be, at least on the short term, very bullish on Ethereum then. There can be no doubt.
So, yeah, I don't want the misquote here. Yeah. But here's my strategy. Let me give you my strategy. If someone's new to Bitcoin and they don't understand Bitcoin, I suggest that you don't jump in, sell your house, and buy Bitcoin based upon what I've said today. That's reckless. Bitcoin might not scale, and if Bitcoin doesn't scale, then blockchains don't work. And if blockchains don't work, this whole thing's been fun, and we've got to rebuild. And I don't know what the second version of this looks like. But I would suggest everybody, and I got to be careful here because I'm not giving financial advice, but I believe that everyone that can afford to speculate 10% of their income should speculate 10% of their income on Bitcoin. The downside is that you lose 10% of your income if Bitcoin doesn't scale. The upside is that the world that I just talked about happens. And if the world that I just talked about happens, then I just don't know what the price of Bitcoin is. It's at least $1 million in the next 10 years, and there's unlimited upside, really. With your Bitcoins, you might get in at the wrong time. You might get in on the day that, Bitcoin Unlimited looks like it's creating something that creates all uncertainty and it crashes by $1,000, or you might get in on that day and you'll want to sell. And if you're not a believer and understand the long-term value here, just stop trading. Don't trade, don't sell, don't buy, just risk 10% of your income and hold it. At some point, you might decide to take 10% of your Bitcoins and speculate with it. And that 10% of your Bitcoins could be, investing in a way more risky future. Like, does Ethereum do something? Does ICOs create a user case? Is the internet going to be disrupted? Is social media going to be decentralized? Don't even apply logic to it, because nothing logical works at the moment. If you try and apply logic, you'll end up investing in blockchain capital and make no returns, because that actually follows net asset value. If you want to apply no logic, then you invest in, CoinDash and the hacker takes all your money or something. Or if you want to apply logic, low logic, you end up investing in an app that, is like I don't know. Anyway, whatever it is. But the reality is that because these have an unregulated secondary market, people are flipping them and making a lot of Bitcoin. And that market seems to me that there is something to this digital asset market. Whether it's done on Ethereum, I don't know, because at the end of the day, I think when this scales, it still needs decentralization to succeed. And I believe that Ethereum has a certain degree of centralization that Bitcoin doesn't have. Because, when CoinDash got hacked for 7 million, the first question I had was, Vitalik, are you going to reverse the chain because they lost $7 million? Now, that might sound like a stupid thing. And he was like, well, they can try and do a 51% attack. But, the reality is that that's exactly what happened with the DAO. and that could happen again with any of these ICOs. But you know, what will happen if Ethereum does implode? Well, you'll just do what storage did. You'll just do a one-to-one swap for the next blockchain that is decentralized. And at that point, we'll have Lightning networks on Bitcoin and whatever innovations coming next. And maybe Litecoin is interesting. I don't know. But I believe that it's definitely worth speculating 10% of your Bitcoin to make more Bitcoin. And Bitcoin is a store of value. And so I'm happy to speculate on these things, knowing that the second this becomes valuable, I want it in Bitcoin.
Very interesting perspective. Very, it was not advice, but very good statements there. I don't want to make something seem like it was advice. And I mean, again, what you just said about Ethereum being centralized, some people will take offense at that, no doubt. But if people think that Ethereum is the platform that all this is going to be built on, but they don't like a centralized one, then there is a decentralized Ethereum out there already called Ethereum Classic. And that is why I talk about Ethereum Classic having a huge upside. But I guess that's a topic for another show. And we are getting to the end of this show. I was going to ask you about the Zcash thing. You really covered that already, that these altcoins are risky, et cetera. The Bitcoin is the one, that the one shot here is Bitcoin. We don't really have to worry about these altcoins too much. So I'm going to leave it for you now. Is there anything that you'd like to say that you didn't get to say today that you want to tell everyone out there? Because we've got a lot of people in Europe and waking up in America right now and going to sleep here in Australia that are loving this.
Yeah, I just want to say that, look, you might be a big holder of Dash, you might be a big holder of Litecoin, you might be a big holder of Ethereum, and you know, I'm not going to lie, I'm diversified. I've got speculations on a lot of these things, but my goal is to make more Bitcoin. But I would like the world to know that none of those are a substitute to Bitcoin, and I think I've made that clear from my opinion and my perspective. And all of those can be incredibly interesting investments, probably not stores of values. You know, prove me wrong if you like. They might be incredibly interesting investments if Bitcoin scales, because they all need to be traded into Bitcoin. If Bitcoin, you know, they're all correlated to Bitcoin in terms of the trend of the market. And yeah, you might quote these Bitcoin domination index and stuff like that. But, you know, that just factors in the fact that we've got thousands of ICOs and coins. Of course, Bitcoin domination is going to go down when you're getting 10,000 new coins. And of course, it's going to go down when all of the hedge fund money is being speculated into ICOs and kind of creating a self-fulfilling prophecy, because there's so much investment now that, you know, interesting things could happen with this. And here's the final thought. Okay, I got it now. What I want to say is the final thought. What's the market cap today? Is it $80 billion or something like that?
Something like that, yeah.
Okay, when I first wrote the book Bank to the Future, I'd have to look back. It was under $1 billion a market cap. I can't remember exactly what it was. But now today, we've created, as an industry, as a sector, all the newbies, all the miners, all the veterans, all the, you know, the trolls, everyone that's a part of this sector. We have created $100 billion of value. And that was created without a government, without any regulations, without any intervention whatsoever. And that $100 billion of value has now created a self-sustaining ecosystem where we all have the funding to fund our own innovations now. So, you know, although I might be skeptical about how good an investment a certain ICO is, the reality is you can create something that you think this sector can make a difference in the world, and it can be funded by people that believe it without you having to go to a bank or a venture capitalist or any government or anything like that at the moment. And the reality is that we are funding ourselves, and that becomes a self-fulfilling prophecy, because now we have the money to do it. We have the money to take $100 billion to $1 trillion, to $2 trillion, to $5 trillion, to 20 trillion. And that is the most exciting time to be alive in financial history. And, for all the problems, all the challenges, all the insults we want to give to each other, call me an idiot for calling Ethereum centralized. I'm grateful for what Ethereum's created. It's all added to the ecosystem, but please don't remember your roots. This was all created because Bitcoin is a store of value, and respect the history, because this ain't going to happen again. If Bitcoin fails, all your other stuff fails.
Wow, that is a message of pride. I love it. A great conclusionary message. Well, everyone, I hope you enjoyed Simon Dixon today. He is a great guest. That is why this channel is the best cryptocurrency channel on the internet. When we get guys like this that are international, that are awesome, and I am just so proud of all the work that we've done here, just like we should all be proud of all the work all of us have put into Bitcoin and to grow this cryptocurrency space. So again, thank you, Simon Dixon, for being on the show. He will return soon enough because people love it. I'm Adam Meister, the Bitcoin Meister, the Disrupt Meister. Remember to subscribe to this channel, like this video, share this video, pound that like button. I'll talk to you all later. See ya.